Why does the economy feel so on edge right now? It's a feeling a lot of us have. So today, we're going to connect three seemingly different stories: a pretty stark warning from a top economist, the playbook of a legendary investor, and some frankly startling new data on the job market. The goal here is to build a single, clear picture of the huge forces that are shaping our world. So let's connect the dots and see what we find.
We're going to kick things off with this quote from Mohammed El-Arian, because honestly, it's the key to understanding everything else. What he's basically saying is that the era of predictable, stable growth, yeah, that's over. The new normal is volatility. And this isn't some temporary blip. He argues it's a fundamental change in how the entire global economy actually works.
So what does this new era of shocks really look like? Well, it's defined by this huge tug of war between how the market wants to see the world and the reality of what's happening on the ground. And what's so fascinating here is the core disagreement. You see, Wall Street tends to look at every crisis, a supply chain mess, a geopolitical flare-up, as just a temporary and reversible shock. Something we'll just bounce back from. But Alarian's point is way different. He's saying these shocks are compounding. Think of it like waves constantly hitting a cliff. Each one erodes our economic foundation, making us just a little bit weaker for the next hit. And this right here just shows you how big that gap in thinking really is. The market is pricing in about an 80% chance that everything will get back to normal pretty quickly. But Alarian, he puts that number at just 50%, literally a coin flip. That is a massive difference in outlook, and it suggests the market might be, well, dangerously optimistic. So if the world really is getting this risky, how is the smart money reacting? That brings us to our second story, the moves of one Warren Buffett. Look, this isn't just business as usual for Buffett. We've actually seen this pattern before. In the years leading up to the 2008 financial crisis, he was quietly getting ready for something big. He's not just reacting to headlines, he's executing a deliberate, time-tested strategy for a world full of turmoil. And here it is, his war chest. $400 billion. Now, this isn't money that's just sitting around doing nothing. It's what investors call dry powder. It's capital he's holding in super safe cash and short-term government debt, ready to go when a crisis hits and great companies suddenly go on sale at a huge discount. So if you look at Buffett's strategy, it creates a really clear picture of the industries he thinks will do well in this new era and those he thinks are incredibly vulnerable. Okay, so check out where he's putting his money. Oil and energy, which do really well from supply disruptions and global conflict. Insurance, where prices can skyrocket when risk goes up. And defense, which, well, it benefits directly from geopolitical instability. He's literally buying the very things that thrive in a world of shocks. And what he's selling is just as telling. Big tech companies like Apple, which rely on those fragile global supply chains, airlines, which get crushed by high fuel prices, and major banks, which face huge risks when interest rates go up and people can't pay their loans. He's getting rid of assets that need everything to be stable and predictable just to survive. But this isn't just some abstract story for investors on Wall Street. These high-level shocks and strategic moves are having a direct, powerful impact on the labor market and, the future of work for millions of us. I mean, take this for example. Oracle is reportedly laying off up to 30,000 people. But here's the kicker. They aren't just cutting costs. They're doing it to free up billions of dollars to invest in AI data centers. Think about that. They're essentially firing people to fund the very technology that can replace even more people down the line. And the scale of this whole thing is just staggering. According to one analysis, 42% of office and administration jobs have already been replaced by AI. That's not some future prediction, that's right now. And on top of that, there's another 52% that could potentially be automated away. This is a massive structural change happening under our noses. This slide right here, this might be the most important one of them all. Let's just compare today to the very beginning of the 2008 global financial crisis. Okay, so back in January 2008, 1.4 million people had been unemployed for the long term. Today, that number is nearly 2 million. It suggests there's a hidden weakness in the job market that is actually worse now than it was right before the last major economic collapse. Okay, so we've looked at three different threads: economic theory, an investment strategy, and some pretty tough labor data. Now, let's tie it all together into one single story. It really unfolds in three steps. First, you've got the new reality of systemic shocks that Ellerian warned us about. That leads to step two, the strategic shifts from smart investors like Buffett, who are actively preparing for that reality. And that leads directly to step three, where you see the real-world societal impact, with these cracks starting to appear in the job market. Each piece of the story leads right to the next.
And this impact isn't just based on one data point. Another metric shows that job cuts in the last full year hit 1.2 million. Now, if you take out the totally unique situation with the pandemic, that's the highest number of layoffs we've seen since the absolute depths of the 2009 recession. The warning signs are all pointing in the same direction.
So this leaves us with a final and pretty crucial question. Are we just looking at a string of bad luck? An unlucky conflict here, a new technology there, or when you connect all the dots between the expert warnings, the investor actions, and the tough labor market data, are we actually seeing the clear warning signs of a deep, powerful, and fundamental shift in the global economy? That's the thought I'll leave you with.